AI company that offered me some equity to be involved with it, and and so last week all the coders flew in from India and in London, and like I saw what these boys can do like firsthand. Like, you know, the average guy's like, oh, you made a Peloton app with your vibe coding BS. Like, these guys can create enterprise level software for 95% less than it used to cost.
And they're creating like agents to like computer.
But the amazing thing is like
the agents are working all the time, so they're not even doing it. The agents are just always running, and so what they're doing now is going to build the context background of it. Look, we can talk more about it. I'm pitching NVIDIA today. Let's put it that way. That's where my mind has changed. Jeffrey, Starbucks,
and short all the
4%
services,
positive
right? I
US
mean,
comps.
it's glorious.
And
It's
short-
finally here. It's finally
short
here.
the services. I agree. I agree that, like, you know, the stuff I've seen for law firms, for accounting firms, the stuff that they can do, like, you know, guys will try and hang on to their pricing. But I'll give you an example. I was out for dinner last Friday with a guy who works for a huge company here in the UAE, and he told me they just spent like a 1.1 million dirhams, which is about 300 grand US. And I was telling him what you can do for these decks, and he's like, "Wait, what?" And I was like, "Bro, you might have got taken for like 280 grand on that."
You might be.
Well, that's the thing about
you
the
might want to
vibe
learn how to
coding,
dig a
right?
ditch.
I mean, the convergence between, like, it took me 8 hours. I have no coding experience whatsoever, and I'm just basically yelling at it. And so if you actually have the ability, I mean, the degree to which these are coming together, where it's like I can program plenty of complexity, you just got to teach me the very basics. And so it's essentially just you yelling at this unbelievably patient coder who never sleeps, to your point before, where it's just like, screw you, stupid app, you got it wrong, fix this to account for my FTP. And it does that. Once you can figure out how to do that, then you can do accounting software, you can do anything. The possibilities are sort of endless.
The vibe coding, I don't think will be able to do the kind of stuff that enterprises want to use, even small medium businesses. There's just a lot of issues. But like when you have guys who know what they're doing, they can then create swarms, and then basically like it's crazy, right? So the fact of the matter is, you're saying, hey, I got no coding experience, and I tinkered through it and I was able to build an app, is enough in itself to show you, right? Like, now that might not be a commercial level app, but it's working for what you want it to work for, which is become the #1 ranked Peloton biker in the country.
It's better than
it's senior circuit.
I mean, Strava's about to go public, right? Strava's about to go public, and that's their entire hook, is like, we're giving you workouts, we have your data, it's AI. And this is infinitely better. The point is, I made something better than what they can offer me, and it took me a Sunday afternoon, and it was kind of fun and dorky and a nice thing for an OCD guy to spend a little time on. But it obviated like a couple $100 of subscription fees that I would pay to other services, and it just eliminated them and it's actually literally better.
Yeah.
What do you
build your own apps?
To? What do you subscribe to? What models do you subscribe to?
Strava and Peloton, basically, and they give you AI workouts.
You don't pay for Claude? I thought you were a Claude guy.
Out there. You cut out. I didn't hear the second part of the question.
Oh, I thought you were a Claude guy.
Oh yeah, Claude. Yeah, I'm doing Claude, and then I upped my Claude. So it's like you're cutting me off till 9 a.m. God damn it! It's like you're yelling at it like it's your heroin dealer. You just got me addicted to this, and now you're telling me I can't use it. Screw you! Where do I pay?
You can pay more. You can pay more, and like if you're like, oh, I got to pay $100 a month. Well, let me tell you something, my friend. If you were paying an intern in the U.S., you're paying more than $100 a month.
And he would quit because of the unbelievable abusive treatment that I'm giving it with my idiocy. Like, I'm the worst.
Couldn't handle Maggie yelling at him every 5 minutes.
Dumb shit, recode the entire thing. It's like, okay, sir. It's amazing. It's awesome. Anyway, we should talk about real stuff because I think we're on the air.
Yeah, let's get this show on the road.
This is crazy. I have the least facial hair here.
Yeah, it's wintertime in California. You got to have facial hair. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by Ben Bry, who's joining us from, where are you, Ben? Abu Dhabi or someplace?
Dubai.
Where exactly?
Ben Bry
Dubai,
Ben Bry from
Ben's
Dubai.
In Dubai. And Jeff Mackey, our retail pro, joining us from the lovely San Diego. I'm Steve Lamar up in San Francisco, and we're going to talk some NVIDIA. We're going to talk some retail stocks. I know Ben was thinking about pitching an NVIDIA long, which made my head almost explode. First, what do you guys think of this move in the dollar, if anything? It looks, I mean, that move, was it yesterday or Monday when after Trump talked, was pretty staggering. And we're trading down to lows now, and I don't know. Does that have ripple through effects to consumer stocks in general? What are your guys' thoughts?
I think that basically there's a remittance import thing that going on. If you think last year, there was a lot of dollars that flew out of the country in the run up to Liberation Day, and then there was a little continuation on that as people got a little off guard in their positioning, because let's remember, the whole world was extremely long U.S. assets, and so the dollars that flew out were multiple standard deviations above normal because everyone wanted to get in front of that import situation, or the tariff situation, sorry. And then what happened is the follow on in the Q2 was a lot of hedging. So it wasn't selling assets, as some people were saying. It was a lot of hedging, and I can show that with charts and stuff. But basically, Then it stopped, right? And then some money started coming back, dollar strengthened. And then I think what happened here was the yen keeps running up. It's a lot of Japanese issues. They intervened. They kind of got the Fed. Remember, the BOJ is the junior franchise of the Federal Reserve, right? And so they work together. And I think they got the Fed on board, and they're like, look, we can't let this. They're really worried about 160. They think 160 clears, and 180s, 175 is in there, and then 200 is right around the corner. And just for everyone knows, I own some one touch 200 yen binary digitals, and so I think that basically right now there's some mechanical stuff going on, and then it can come back, but. I guess what I would say about the dollar is this: the rate differentials don't justify this, and so what you'd really think about is, okay, the narrative would be everyone's going to sell U.S. assets to go buy other places, and the rest of the world markets have outperformed the U.S. for a while, and so if you're actually bearish on the dollar, I think you'd actually just want to sell stocks and sell bonds, right? Because and hold dollars in essence, because there's a negative correlation aspect to it. Because if the money's going to flow out, it's going to flow out of the asset markets.
Yep. Yeah, that's what
I mean, if I were going to vibe code an app to translate everything Ben just said, it's pretty much just get the hell out of the way of stocks for a while. We talked about this a couple weeks ago. It's after the run you had, particularly in consumer stocks, they're going to be vulnerable. They're going to find a reason to sell off. Everything he said just sounds like inflation to me. Everything reading the consumer sentiment, which is generally bullshit. And, fade that when you get the opportunity. But it kind of is whispering, that there's going to be a little bit of slowdown. And you're looking at stocks that, at least in the consumer, my little world, are up 50% since right before Thanksgiving. All of that says just get the hell out of the way. Just back up a little bit. Just take a step back. I mean, my old boxing coach used to punch me in the face and say, you know what? You got confused and you stood there. Just don't stand there.
Get out of the way.
Get out of the way. Just back the hell up and put your hands up and kind of reassess the situation. Don't be a moron. Which is sort of, it's not a call to sell everything. And Starbucks put up great numbers today. They have all those headwinds and then some. They're doing great in China. That wasn't supposed to happen. They have tariff problems. That's an issue. They've got, what's more discretionary than a cup of Starbucks? There's plenty of places to get coffee. There's plenty of ways to fuel your people are going there again. It's their comps are positive for the first time in 2 years. So I don't think that number holds in terms of the stock, but the consumer world is sort of fine. The stocks maybe aren't for a while, and it's just time for a little prudence. I'm looking at longer term stuff. I'm looking at what Amazon's doing. I'm looking at kind of the slow Starbucks turn. This is a time that you let things bake a little bit and you kind of fuss over them and you go to the kitchen. This is not a time to be kind of day trading and whipping around your consumer names.
What are your thoughts on all this Amazon hubble over the last couple of days?
I think it's fantastic. I think they're finally done dicking around with their retail. They've been really kind of atypically half-assed about everything physical retail for You're old enough to remember. We have all got beards of varying length, but they're all gray. So we remember when Amazon bought Whole Foods and that was going to be the end of grocery. It turns out they really haven't done anything with that division. They've been screwing around with kind of the dollar store concept and all these little kind of wacky ideas that we're never going to go anyplace. It's to replace W.H. Smith and be the local shop where you pick up your newspaper only without cashiers. Who gives a shit, right?
Yeah.
That wasn't a real thing. But when they go to Orland Park, Illinois, which they did, I reported on it last week, and now everybody's kind of picking up on it. But I'm a wonk that way. But they're building a 225,000 square foot store right between a Costco and a Walmart. That's not half-assed, And so they're closing kind of the nickel and dime stuff. They're closing the little experiments they were doing, and they're ready to get serious. That store, if they execute as planned, and Amazon doesn't tell you any of this, you sort of have to figure it out. But they've got tons of shipping docks, so they're looking to do a lot of turnover there. They've got more than you expect for those kind of docks. It's laid out, at least in the plans that they're telling the city commission of Orland Park, tons of space for people to drive up and do fulfillment. So that tells me they're going to use it as the first kind of from the ground up store that was built for the modern age, rather than just the big box discount type of models that you have thousands of out in the country. This is going to be intended right from the nuts up to be a place where you're going to distribute to the local area. You're going to have customers coming in to pick up daytime, and it's absolutely a shot across the bow of Walmart and Target. Now, I don't think it happens tomorrow. It takes a while to build a big store. Gone in with intent. Just to open those little nickel and dime garbage stores. This is a real investment in a real location. And so this is going to get a lot of eyeballs at a corporate level at Amazon. They move with such alacrity when they finally decide to move, and they have such a long-term perspective otherwise that, this is a real change of pace for them. Now, it's easy to get in front of your skis and be like, okay, we got to own Amazon right now. It's time to short Target and it's time to do all that, It has the potential to change discount in the way we think of it. 20% of Walmart's business now comes from online. That's a serious competitor. That actually, and it's not like Amazon to let someone come in and pee in their garden a little bit. So, Amazon's fighting back, and they're doing it with physical stores. I'm kind of excited as a discount wonk because it's long overdue. It's about time that we
no, and the sheer scale.
It's been a while since my dad came up with planograms.
Yeah, the sheer scale they have now, if they get into retail stores and do it the way Walmart and Costco have, is staggering. What they can do in that space, man.
And it's
prices are going down.
It's $1 trillion market, and so it's easy to say, oh, these stores don't make any money. Well, they're going to make more money because between automation, you have goods that really don't get touched until the customer takes them off the shelves. You have warehouses that and make sure the computers are happy, taking down the cost. And so if you can go on a $500 billion revenue run and you take your profits from a meager 5% to 8%, well, that actually adds up kind of nicely. That becomes a real business. And lest we forget, 2/3 of Amazon's revenue still comes from retail. And so it's going to trade next week when it grew at 20%, and everyone's going to ululate and lose their minds over that. But in the meantime, the straw that stirs the drink revenue-wise is still retail. And that's still something that Amazon's now once again paying attention to. And, if you're Target, man, the degree to which Amazon just comes in and says, we've just decided to cut 10% of our workforce, and they kind of do it with a shrug, and it's like, they don't give a crap. It takes Target freaking an hour and a half to figure out if they're going to fire one person for not showing up because it's cold and there's protesters. They've got to speed up. Amazon's moving at warp speed once they decide to move. And so, it's easy to get overexcited about it, but man, it's a big deal that they're doing discount stores. It's a big deal that they're closing those other stores. People are looking at it as a sign of weakness. It's not. It was a sign of weakness that they haven't done anything with Whole Foods in 10 years.
Yep. All right, let me change it. Let me change the subject on you, Jeff. Are you at all concerned about your American Eagle position now that Sydney Sweeney might be in jail for hanging bras on the Hollywood sign?
Sydney Sweeney is the gift that keeps giving for American Needle, man. It's the fact that you even asked me that question just shows the staying power. They ran those ads and they were entirely sold out of that product within the space of 2 months. All that happened from July to September. By September, American Needle was entirely sold out. They were out of the Sydney Sweeney business. And it was a tough day for boobs yesterday. Basically, if you're going to kind of boil it down, you had the close of they closed the Twin Peaks chain. That was a failure. Sydney Sweeney got arrested. It was sad. I for one am in favor of those particular items, and I think that Sydney. I think they'll be fine. More worried about Victoria's Secrets, but I'm kind of surprised she didn't do a joint offering with one of them with an established underwear brand, because they were offering her money. Sydney Sweeney's freaking genius, man. She's gonna buy and sell all of us before she's done, and she
stays out of trouble.
Yeah. I mean, but she's sharp. It did her brand absolutely no promise whatsoever to have every paper in the country be talking about her getting arrested. I think she'll be able to afford plenty of lawyers to get her out.
I'm sure. All right, Ben. What are your thoughts? What are you thinking about this NVIDIA long? I have to say I was surprised to hear it when you mentioned it. Given how many times I've heard you talk about shorting that thing or buying puts. What's changed your mind here?
Here's the thinking. It's pretty simple. I think as we come into the beginning of the year, there's been a reallocation. You've seen a lot of money flow into small caps, rest of world, the precious metals, and I think that I have Mike Green coming on my podcast tomorrow, and I think that the normal flows continue to hold. You keep getting more money going to the mega caps, and if you look, Jen, can you pull up the first chart I sent you, please? This is the chart of NVIDIA relative to the SPY, factored indexed to, I don't know, I think beginning of 2020. So what you've seen is these periods of ripping followed by periods of consolidation. And let's be clear, when I didn't like it, it was that peak on the third rectangle, about 130, 140, and I was like, hey, it's in front of its skis. And it was. There was two different times that it went down 30 some percent from there. But here's the thing. I think there could be a compute surplus on the horizon, maybe a year out. But for now, I think business is booming, and I think that the Mag 7 is traded pretty dog shit, to not try and put lipstick on
a phrase.
Yeah, basically these stocks have traded poorly since October. October 9th when we had that deleveraging event, and look, if the market is gonna continue to rally, my guess is that these things will catch up, and we're starting to see it the last 2 days that the Mag 7's finally caught a little bit of a bid, and so I looked at the 200 March calls are about $7. You could sell the 150 March calls for $2, so you could do a risk reversal for $5. So that's about 8% move from here. You'll get the earnings at the end of February in there. You could just do the calls themselves, and then you need about 10%. You could just buy the stock, and with the idea that the flows favor the mega caps. These companies are still kicking ass, and we've had a big, I want to call it a narrative shift, flow shift, but this happens at the beginning of the year. Pensions at the end of the year decide, hey, we're going to put a little money into something else, and it doesn't take that much money coming out of the Mag 7 to go into these other areas, and one sliver of the Mag 7 into small caps is a big deal. Well, any amount of money into miners is a big deal because there's no cap there. So then you see the price action, but let's be honest, the cap's not really there. Now my gold, on the other hand, there is some cap there, boys. You remember in the spring of 2024 when I came on a little tired and I said, just buy more gold. I think it was about $2,100 at the time. That thing aged like fine wine. Now that's above 5,000. But my thinking is mostly mechanical. 2,000. The out year, so FY2, 19 and a half times PE. Market's 19 and a half times PE. I could argue the market's overvalued, or those estimates are too high. And so if you're getting the company that's really dominating right now for the market multiple, I don't know, the market seems very lofty in a lot of places, and if you can go to the top of the market and everyone's kind of forgotten about them in some weird way, it's contrarian. And Jen, can you pull up the valuation chart I sent you, the second one? Look at
So
those multiples.
you're saying everybody
That's a
doesn't
5 year.
already own NVIDIA?
No, I just think that, if they continue to do well and flows continue, money continues to go into passive, and they allocate a larger weight continuously to the top of the market, that these guys get a bid.
Got
And
it.
so, it's not like I have some great call that, oh, I have an insight of what's happening. I'm very aware of all the circular stuff going on, and so I get it. But I'm just trying to say is that instead of like, if this is more of a trade of, if you don't want to fight the market, right? Like, okay, say you want to sit in cash and just get your ass handed to you, or even worse, short the market and get your ass handed to you. Um, you can be like, hey, look, the best companies in the world are lagging, and it doesn't mean this is like a 1 year or 2 year look. It just means that there could be a catch up trade here in the Q1, basically, because they had that those rectangles that I had showed you there are these periods of consolidation, and the trend's still bullish. That's a bullish chart if you go back to it. So I don't know, like, it's, again, this isn't like the mega high conviction name. It's just like, I bought this on the idea of, like, nobody's talking about it. I'm here in Dubai at a with the next gen AI company. This stuff is accelerating. I do think there's a compute surplus potential in a year. I do think the memory bottleneck constraint is a real thing, which we could talk about. But I don't know. Just feels like, I mean, you could probably say the same thing for the Mag 7 themselves, to be honest, right? But I was looking at NVIDIA, and I also thought it'd be a little entertaining because I've been pretty much a negative guy on NVIDIA. So I just like to show that I can take the different side of the coin sometimes.
And if we start turning everybody into vibe coders, we're going to need more and more of these things.
Maybe what I would say is that as the architecture changes in these models, and which is happening in real time, is that the compute demand will go down, because in essence there's no memory. So if you go on ChatGPT or Claude or something, you got to redo all the steps every time you do it. Well, the next base models are going to be context-based models, because when you think about it, you as a human have internalized processes, right? So you don't start at step one every time you do it. You're like, skip ahead, and that's why
Right.
everybody who's on Wall Street Beats, we get to skip a lot of steps in analyzing stocks, because you know why? We've done it for a long time. We've developed that memory muscle, or training, to use the LLM version of the model. And so as that becomes more rolled out and memory becomes more ingrained in these things, context becomes more ingrained in these things, and better architecture, there could be
They
a
become way more
situation where,
efficient. Yeah.
correct, and you don't need as much compute, which is why I'm saying in a year you could have a compute surplus. But right now, I just think that this is a trade. Let's just be clear. I'm not like, oh man, own this for the long term, Jeremy Siegel style. I'm just saying that this seems like there could be a catch up trade here, and the market with the one beautiful build, like bonus, like, it sounds like the Fed's not going to stand in the way. The dollar's going down. That you could just get a little bit of this love, and
Keep melting up.
it's funny. Yeah, and like, let's be clear. I'm a contrarian by nature, and Jeff, you remember Jeff in mid-November when I was like, I think it's time to buy a tariff basket of consumer names, right? And those things were on the deathbed. That was just an
Yeah.
ugly time. And Jeff came on my other podcast and we talked about it. And Jeff was long a lot of stuff. And look, those things did well. I don't think the U.S. economy is massively better. I think sometimes these things happen where money flows somewhere else, and then they're like, well, in the case of the consumers, it's like, well, maybe they're not completely dead, so it just takes a little money to get them going again. And in this case, it's like, yeah, they're still kicking ass. You know what I mean? So it's not dead. It's just like, business is still going well, basically. That's the way I would summarize it.
And
All
you're
right.
just kind of playing ebbs and flows with the stocks. It's just not, you're not really going to make your year at this time of the year usually, but you can
No.
certainly screw it up. There's plenty of ways to fall irreparably behind. I feel about Amazon the same way you do about NVIDIA, where it's just like, listen, this is a monster company. It's, it's not the contrarian idea of all time, but it's a pretty textbook base that you've been building up as this thing is just kind of coiled up. you don't have to smash your face with a hammer like 500 times. It's like, let's not overthink it. Let's not make it super complicated. Let's look for places you can park your money and just do a little better than the tape.
Yep.
Yeah, and I think that's right. I think Amazon goes in there. Amazon just cut 16,000 people today. They announced it. I mean, it was telegraphed they're going to do this, but there's a chart. I wish I had it with me, but tech employment was up and to the right chart, and now it's broke trend severely. And I'm telling you, sitting over here and seeing what we were talking about at the beginning of the show, what the LLM models as a swarm can do in the hands of serious engineers is impressive. And there's going to be
Yep.
a lot less demand for all that stuff than there used to be. So the idea that I'm ruminating on is this, and what I think I've been wrong on, just to be full of self, is the last 6 7 months is like the underlying economy that we knew growing up of a labor-based economy is not doing great. Like the average person's pissed off, but it's not really mattering because you're getting more output out of these things, and you're getting people focused on the people spending money, which is the top, and so there's this weird dynamic. I know like people like to call it the K, but it's like it is a very different economy potentially than we've seen in the past. And this isn't me wanting to give any recommendations or anything like that, but there is this like idea amongst people that, oh well, this will revert, but it doesn't seem like anybody wants it to revert. The governments seem to not want it to revert. The people who have the money don't want it to revert. So sometimes, you just go with the flow, which is why I'm saying stuff like Amazon, NVIDIA are interesting right here as laggards. And, we see this every once in a while with the Mag 7,
Yep.
where people kind of forget about them and they're just like, whatever, or they get bored. People like shiny stuff. And, they're still where they are. They're like that Christopher Walken movie where he hypes that guy up in the bathroom speech talking about the lion. Every once in a while, the lion's got to get off his ass or remind the hyenas who he is.
Precisely. I mean, and you can see it on a company basis as well. When I talk about discount stores becoming more profitable, that clearly is K-shaped economy thinking. That clearly is going to come at the expense of a lot of guys who worked in the warehouses. Tons of people who had those jobs aren't going to have them anymore. But that leads to Amazon making a shitload more money than they were going to. So I don't know. I mean, if the economy collapses because you lose the warehouse jobs, again, it's a little bit of a circular kind of problem. But at the same time, these companies are becoming more profitable, and ultimately, if you're an investor, it's you want to be long companies where the earnings are going to go higher, and the multiples have contracted over the last few years, and that's what we're seeing. And so that's
And
on plan.
I'd add to that are on the forefront of technology that are
Right.
there's a lot of things that you don't hear about in the forefront that are going on that these guys are definitely involved with that our future earnings. Like it's just like when we think about like, oh, I want to buy a coal company, or I want to, which coal names did really well in the last 6 months, or I want to buy a gold miner or whatever. That's still a shit business that's not up with technology. It's just having a moment, right? So
Yeah.
small cap cyclicals, bad consumer companies, they can be great trades. But let's just be clear, like they're not like at the forefront. They don't have the budgets. Like they don't have latent earnings power that you just don't see. Like it's much
And
easier to
that's
get a
where the
read through
problem
on.
is. And we opened this talking about Starbucks at the beginning of this segment, and it's fine that their comps are good. Their earnings are not good. They don't have they can't really rip the expenses out because they just need baristas who are a pain in the ass and forming unions, and they don't have that opportunity. They're not driven by the cost basis that's factory driven the way Amazon is, the way Walmart has a chance to actually improve their fundamental margins. They don't. You still need a lot of baristas to serve a lot of coffee, and that is a problem for them. It's headwind. So the stock spiked this morning, but then when you get right down to it, it's not an earnings growth explosion there. They're not just getting people back in the stores as kind of a baseline, and you still end up with a business that's really not that profitable.
Yeah, and
Yep.
I think that's an overarching theme that I've had to talk to people about is like people are worried about inflation, but if you look at the true inflation data, we're down to 1.5. Like things are going down. Alcohol prices are dropping, and I don't know if you guys saw the chart that the FT put out, but alcohol inventories are just through the roof. And we can all as nice Gen X guys, blame the Gen Z that they don't know how to drink. But the truth is those guys are sitting on a lot of inventory. Egg prices are down. Energy's still, I know nat gas because of the polar vortex, but like still subdued, and housing is still an issue, and auto's still an issue because it comes back to the average median guy is not doing that well. But it's also that costs are rising fast, and so the barista, your tariffs, your just costs and metals, whatever, like costs are rising faster than can be passed on. And I think that's the dynamic that the market needs to wrestle with, is that just because UPS tells you we're expecting 4% inflation, it's like, we'll see if you can pass it on. You know what I mean? Like, one last example on that, like, in the AI space, they've eaten up. There's 3 players that basically supply the world's memory. They've basically eaten up all the memory supply they've produced, and so now consumer, so your iPhones and your PCs are left out to dry, and so Dell comes out and says, hey, we're gonna have 30% hike in laptop prices. Let's see the elasticity on that. Like I think that a lot of these guys, and Jeff can probably talk to that with retailers, especially in the last year with the tariffs. People have plans, or what Mike Tyson said, everyone's got a plan until you get punched in the face, right? And the truth is that because your costs are going up at a certain rate does not mean you can pass it on. And I think that's a real thing for a lot of these stocks.
Yep. Yep.
All right, boys, let's wrap it up. I got to get kids to school. Jeff's got to get on his Peloton. Dinner. Ben's got to go get dinner. Have a great day. We'll see. We got Fed Day today. Is that right, Ben? So we might have some fireworks later this afternoon.
Forget the Fed. Forget the Fed. We're talking stocks.
Screw the
here.
Fed.
Okay.
Yeah.
Nothing burger there. All right. Follow us on WallStreetBeats.com. We'll see everybody tomorrow. Have a great day. Thanks, Jen.